Hi, everyone. Nolan Peterson. I'm the CEO and president of World Copper Ltd. We're a Vancouver-based junior mining company with exciting projects in Chile, the Escalones project and the Cristal project, as well as an exciting project in Arizona called the Zonia project. We understand the needs of the copper market in the near future as well as the long-term future, and we're positioning this company to supply that and benefit from significant increases in demand.
Nolan, good to see you. Lovely
Good
to meet.
to see you as well.
We've not met or spoken before, so always keen on a copper story and trying to. And this is, I guess, one of the newest kids on the block. So where are you now?
I'm in Vancouver at the moment. Yeah, very an unusually bright day here.
I'm kind of jealous
for this time of year.
That sea looks rather refreshing and blue and lovely. But look, we better talk copper instead, though. Look, can we just kick off with a little bit about you, relevant experience to what we're going to talk about today, and maybe just introduce some of the team. Some of the names I recognize from the PowerPoint, but let's go for it.
Sure. Yeah. So my background, for the benefits of the viewers, is in engineering. That's my undergraduate degree. I graduated from the University of British Columbia. I spent the first 5 years of my career working for a company called SNC-Lavalin, which is a very large engineering, procurement, and construction management company focusing on project development for major clients. I've worked for clients like Newmont, Barrick, Rio Tinto, KGHM. I worked on the KGHM pre-feasibility study many years before it was put into operation in Chile. I then transitioned to a producing gold company called New Gold, where I was involved in the construction of the Kamloops and New Afton copper gold project as a engineering manager as well as a commissioning engineer. I also worked on the Blackwater and Rainy River projects for New Gold at a feasibility stage, and then ultimately was involved in the Rainy River construction. Along the way, I picked up an MBA as well as a CFA designation. So I have a fairly strong financial background as well, and I've always tried to marry the two, technical as well as financial. Last 5 years, I spent time at New Gold in the corporate finance group as well as TMAC Resources, most recently acquired by Agnico Eagle. So that's what I've been focusing on my entire career in mining, nearly 20 years now. Project development, operations, corporate finance, corporate governance, board relations, executive management. That's me in a nutshell. On a more personal note, I grew up in a small community in the Arctic called Cambridge Bay, Nunavut. Some people know that about me, not a lot do. But being up there, seeing mining development firsthand, the impact on the community, a very positive impact, I must say, is a small community of 1,500 people. That's kind of what fuels me now, is being able to develop mines in areas and share the prosperity with locals as well as our shareholders.
Okay, thanks for sharing that. I did not know that. Can we just talk about some of the people in the company who are active, right? I recognize some of the names who will probably be influencers at the end of a phone call, but who's active in building whatever it is that you're building?
So our chairman is very active in the management of the company. His name's Hank Van Alphen. He has an extensive history in the mining industry in Vancouver. It's focused mostly on South America. Many mines that people are aware of now, such as Taka Taka, Mirador, or projects, he was involved with them at a very early stage. He also was founder of a company called International Tower Hill at Corriente Resources. A couple of those companies went from basically $10 or $20 million to either sales in the high, I guess, nine figures or how many? 860 million, for example, for Corriente Resources was the sale. International Tower Hill was over $1 billion at one point. He's been involved in recently in a company called Wealth Minerals, which is a lithium project in Chile, and that's kind of how World Copper came about as a subsidiary of that. We have an executive director in Chile who helps as well with strategy. His name's Marcelo Awad. He was the former CEO of Antofagasta Minerals for 8 years, as well as spent some time with Codelco before that. He built 3 mega projects with Antofagasta, as well as took the company from a $4 billion to $20 billion valuation. We also have a general manager in Chile. His name is Krzysztof Napierla. He's had over a decade of experience with KGHM, which is one of the world's largest copper companies. He was their general manager in South America for the last 3 years, as well as the general manager of their Frankie mine. So these are the four key people at a high level who are driving our agenda right now. We also have geologists as well associated with John Drobe is our head geologist, extensive history in identifying prospects in South America, a lot of experience in gold and copper.
Brilliant. Like, I appreciate it, Nolan. Right. I better set this up for the folks at home. Like, for me, because this is the first time I've spoken, I just want to kind of general overview. I want to let the story wash over me, trying to understand the moving parts, and more importantly, understand how you're going about putting the business plan together, and more importantly, the strategy for delivering said business plan. It's early days, so I hope you will come back on and have a more technical conversation with us with regards to certainly around the PEA and some of the assets. But for today, let's kind of just keep it fairly high level. So it's a relatively new project, therefore newish team working together. What was the plan day one? Why did you go down to Chile? Surely it's a great copper history, but you must have looked at that and gone, crikey, geopolitically, maybe there are better places.
Yeah. So day one, Chile, of course, just to finish with or start with your finish there, the world needs copper, and it has to come from Chile. A large component of it has to come from Chile. 20 to 30% of the world's copper is supplied from Chile. 30 to 40% of the reserves and resources. We're on a knife's edge of production and supply, or supply and demand right now. So really, you can't get away with, you can't just say, I'm not going to look for copper in Chile and just go mine somewhere else, because we'll just never meet the world's required supplies from there. So that makes Chile a good jurisdiction still for exploring for copper. Obviously, every major copper mining company in the world operates in Chile, and that's not going to change anytime soon. What was the impetus to start World Copper? Hank Van Alphen and Marcelo Awad, with Marcelo's extensive experience in Chile and copper, said, this is where we need to be in the next 5-10 years, with attractive assets that we can either be developing or, working with partners to develop, or potentially selling them to larger players as we show the value there. So they identified a project called Escalones, which is our flagship. And they said, and you said it's a newer project, but it's actually been around for almost 20 years now, been drilled extensively by previous holders. There's been 53 drill holes and 25,000 meters of drilling. So that's a pretty common story in the mining industry. Of course, these things don't happen overnight. But the previous holders, we felt, and our geologists felt, that they didn't understand the asset and how the market was trending. And by that, I mean, they were focusing on sulfide flotation extraction, and that's pretty technical for this point. We can talk about that later. But we saw the potential to change it to an oxide heap leach operation because we felt that was the value add for the project. So the company itself was created about 2-3 years ago. It was private for most of the time. Went through the motions and things that you need to do to take a company public. Went public just last January, so just a year, January 2021. So about a little bit over a year public right now. So in that sense, it's a very fresh story. We did work that allowed us to change the understanding and the nature of the deposit, to refocus it on the oxide potential. And that culminated with the work last week of releasing the preliminary economic assessment of an oxide project. Now, going back to the newness of a project, you normally would not be able to get to that level of development that quickly, but we had the geologic data, the drill hole data, and we just did the necessary metallurgical work to reinterpret it and provide us with that opportunity. So that's where we saw the most value, and it's already paid extreme dividends. We've made this project more valuable than it ever was before. Now we just need to get the message out there and continue to de-risk it and advance it.
Okay, so that's and I do want to come to the PA. I do, but I'm always intrigued about how these things get structured and set up. Okay, so previous owners been working on it for a while. You've come up with a new way of a new approach. The heap leach, reduce costs, the economics, will I guess leap off the page as a result. But what was the deal you struck with them, and then what were you doing during that sort of private period, that 2 years of private company enterprise?
So I wasn't involved with the company until April of last year, but basically the company itself made a deal to acquire the asset. I think it was a cash payment of about $3 million, a retained royalty of 2%, which can be purchased back for another $3 million at any time prior to 5 years of production of copper from the site, and a 30% ownership in the resulting company. I think it was actually higher, 30% when I joined the company. It was actually higher before it was diluted by subsequent financing. So this company was called Trimetals. It's now called Gold Springs Resources. They still exist, but they've divested their entire interest in Escalones and World Copper. And so basically the logic or the argument that was made to them was that, they misunderstood the asset. They had lost the, drive on their side to advance the project. And they said, if you think you can do a better job of it, then we'll be happy to take a step back, and a deal was struck in that regard. So that's how these things come about.
Right. But it wasn't just drive. It was an approach. So that you say they're perhaps not as up to date or with what the market sentiment was in terms of how you approach these things, but also a cash constraint at this point.
So they are a precious metals focused company. And, again, we're getting technical here, but often with copper deposits, you have a sizable gold component. They were always looking for gold, and they didn't really find enough of it with this asset. So they said, if there's not gold here, we don't know if we can make this thing work for us. We don't see the potential for it as a copper deposit. It takes people who focus in on copper to really understand where the value is. So they have a project in Nevada right now that I think they're focusing on, and it's a pure gold project. It's just a difference in strategy and focus of the two companies, and that's it created the opportunity for us to step in and really make it something special.
Okay, and so during that private phase, who financed it, and to the tune of what amount? What was achieved during that period? I guess what I'm trying to understand.
So Wealth Minerals was involved. I don't know exactly the who stepped in. It wasn't very major players, like no large institutional support or anything like that. It was largely done in the depths of COVID. Financings were challenging at the time. If anyone remembers, just after March 2020, in that time frame, I think this company had a nice financing lined up at PDAC in 2020. For those that don't know, that's the largest mining conference in Toronto every year. This is the last in-person one. And, it's usually early March. So they had a nice financing lined up, and then that just fell apart from what I understand as COVID set in. Copper prices dipped. It was challenging to raise money. And so they just took it from any entity that they could. We've done a lot of cleaning up of that financing. These things normally take years to do for a lot of junior companies. We've been doing it all of last year. Our last financing we did in October was very strong. We have an institutional investor, Mackenzie Financial, who's been in fairly early, but other than that, no large institutions or at the moment. It's again very early story. We're getting the message out there right now, and since we've released our PEA, a lot of chatter has picked up around. A lot of interest has come our way from those institutions. Now it's about finding the right strategic investor and dance partner, so to speak.
Okay. Well, let's come to strategic investors in a second. So just around this, let's going to stick with that kind of the corporate structure component, Rich. So not quite clear on how much money went in during that period, and that's fair enough. And you're newer to the story, so I guess that obviously previous to you being there.
Yeah.
Right. So it's 75-80 million market cap, depending on the time of the week at the moment. So you still, that sub 100 million mark, starting to get noticed. The trend is moving the right way. All good news. This PEA that you put out, okay, we all accept is plus or minus 30% in terms of what the numbers could be, for PFS, right? So that's all fine, but it's a big number, right? 1.5 billion post-tax NPV8, right? 46.2 ARR. These are pretty punchy numbers for a small company, and the share price came off a bit. Was that people like cashing in, or what was happening there?
Yeah, we've had, like I said, we've had a tremendous period of growth. since I joined. Certainly when I joined the company, the share price was we did a rollback last year. It was at a post rollback price of about 30 cents. And so we got up to over $1 recently. We traded a lot of volume last week off the news of the PA, so definitely a lot of people see the value there, but we did have a lot of selling, as you just mentioned. What happens is with a lot of junior companies is there's a lot of people who do the financing, take part in the financing, and they're not necessarily long-term investors that want to be involved. They are on to the next financing. That's how they make their margins. It's a little bit of I guess, something that's not well known in the industry. You expect people to be long if they see value in an asset, but we know from this project and others, and everyone talks about it, that there's sellers who will just sell, especially in Vancouver. So that I wouldn't necessarily attribute any of the pullback to the strength of the project. Certainly off the back of the project, we've got tremendous interest from brokers, from financing institutions that are saying, they expect us to need money after a PEA, but we don't at the moment. And that's something we can talk about as well. And when they expect a financing, a lot of buying kind of pulls back and says, well, I'll just wait for the financing as well. So it's a little bit of pushing and shoving and trying to get them to understand we don't need the money. If they want to take part at some point, they should get in early. And I would encourage that as well for everyone, of course, as the CEO. I was in early myself with my own investments on top of the options that I've been granted. But I would encourage that as well. Eventually, selling like this dries up as the people who don't want to be a part of the story move on.
And they probably play the warrant game anyway.
Exactly, yeah.
Okay, so you've invested cash at market as well, your own cash.
I purchased. Yes, I've been given options in 2 tranches, about 1.4 million shares, and I've purchased myself about 400,000 shares, I believe it is, in the open market.
Okay, that's good. Good to know. Right, so we better get back. Let's get back to what it is that you're trying to do here, because sub 100 million, so 70, 75, 80, whatever you are, depending on the time of week. You've got a lot to prove, right? So you kind of got this big project, with a big capex, with some big numbers at the end of it. If you can get the whole thing financed over whatever period of time it takes you to go through the studies, people have got to believe that you're capable of doing that and that you want to do that. But you've already talked about a strategic partner at this early stage. So what's the game plan on Escalones?
Yeah, so the first thing I would say is, first of all, the capex is not that large relative to other copper projects at the scale that Escalones is at. And of course, that comes from the SX-EW oxide heap leach advantage there. A sub $500 million copper project that produces as much copper per year as Escalones is at the PEA stage right now. We're half the average capital intensity spend, which is how much you have to spend to get a ton of copper produced per year. It's all in our comp deck as well. You'll see. So it's if we de-risk the project, move it along, for a junior company, you see $500-600 million valuations, especially when you're sitting on a $1.5 billion. If financing options are more available than if you are a $70 million company or even a $500 million company, but your asset that has an NPV of 1.5 billion, like Escalones, costs $2 billion or $3 billion to put into production. Now, with that being said, a strategic partner is something that a lot of juniors pick up along the way as they, you start with a land package, you start with the initial founders and the people who are interested. You do a couple financings, maybe they're brokered deals, you get some marketing done by analysts that start picking up your story to assist with those financing. These stories evolve over 2, 3, 4 years. You're drilling land packages, you're building up your resource. We have only been at this again for the last year publicly. We don't have any analyst market pickup yet because we haven't done any brokered financings. There hasn't been that need there to support it by going to the institutions. But as that ramps up, we will be attracting strategic investors. We're already starting people who are crawling through our data room on Escalones and Zonia. looking at the information that we have, talking about interest in making deals with us. Now it's about how big a position do they want to take? Where do they want to support the growth of the company going forward? But they move more slowly than the general market, of course. They want to be very smart with their deployment of capital, and these things take time, and they will be getting done very shortly.
I mean, it's good for you to be able to talk about that. But sorry, you got strategic partners coming in at PEA stage in Chile as well. So you were kind of narrowing down the audience quite quickly, aren't we? In terms of who's stepping forward. So you've got industry players you're talking about in terms of strategic.
Yeah, of course.
Right, okay.
Yeah, no, or capital funds that are looking to just find a good asset. Like you said at the start, it's hard to find a good copper story. I talk to investment bankers at major institutions in Vancouver and Toronto, and I'll say, the copper space, right? And of course, I've spent 20 years. I keep an eye on it. I've got they need to be on trend for what is coming down the pipe that'll need money. And I say, have you ever heard of World Copper? It's like, no. I tell them the story. It's the same story I just told you. And then I show them the PEA, and they're just like, how come I've never heard of this? Right. So, there's always that first question, like, is this for real? Is there something going on here? Certainly not. It's just a newness of the story. And, there's a bit of a skepticism when you hear it for the first time. But that is the honest truth. And there's good opportunity here. People are seeing it as they take a look at the project more closely, which is just happening now. Right.
And do you know what it feels like the team, you and some of the names that you've mentioned already, they feel like deal makers, right? So you've gone and picked up, dusted off, and kind of almost rehabilitated a copper idea, and you put out this PA, which is fantastic, right? How does the company move forward? Because where's the excitement about the geology? And how do you fund the development of the geological component, the geological model, and allow you to kind of move through, resource expansion and move through to the next study, PFS, or however you intend to approach it. So, where's that in this story?
Yeah, so I would say first too that Hank Van Alphen, certainly he's made his history of deal making, but myself, I've always been an operations and project development guy. Just grinding it out on the engineering side, putting together budgets and life of mine plans, not necessarily playing the markets. As I work for operating companies, right? It's never been for me about selling the asset. It's about finding the value there and unlocking it. And that's why, personally, I was the project manager for the company on the PEA for Escalones, because it's a relatively small PEA compared to some of the other projects that I've worked on I have extensive history in project development. So I would say that, Marcel Watt, of course, certainly a deal maker, but he's done a fair bit of project development as well. Now, what is in store for the future for Escalones? Now, not only do we have an attractive and what I would say spectacular economics that would excite the market and warrant future development, it's a prize now that we understand, and we can say this is the pot at the end of the rainbow that we're chasing, right? It's a clear demonstration of that. We also have exploration upside potential at Escalones. Of course, every company talks about that. We have what supports the PEA is what we call the main resource for Escalones. It's called the Meseta. So it's on the top of the ridge that houses the Escalones property. Immediately to the south of that is an identified target that we call the Mancha Maria, immediately adjacent. I mean, really, the drills just stopped by the previous operator because they ran out of money in the mid 13s of 2013, the 20 teens. And we believe that there's an alteration zone there that makes it pretty clear. We also have done surface sampling last year that shows that it's confirmed there's copper mineralization there. We have a drill program that we expect to receive permits for in the next couple of days, actually, that will allow us to drill that ridge off and prove that the mineralogy continues. Now, the first goal will be to extend the oxide layer understanding, and that has the potential to double this resource in size. By the volumes involved, if we can prove that the mineralogy continues, that will give us a strong idea and proof that the thesis is that this is a resource that's only been half drilled at the oxide level. There's significant deep drill hole potential from the sulfide layer, which has had some drilling on it done previously, but we still, of course, have to fully understand that. And then on the Escalones package, we have 3 other copper porphyry skarn deposits to the northeast, about 7 or 8 kilometers away, that each has the potential to be as large as the main resource. We also have surface sampling and geophysical work on those assets that prove that there's copper there, but no drill results have been done historically. So if you want to compare it to another project, let's take a look at Filo del Sol, which I'm sure many viewers are very familiar with. $1.5 billion valuation. They have their concept. They put out a PFS in 2019, which was a similar to Escalones, is a starter understanding of their resource, which was a solvent extraction electrowinning copper gold circuit. So we are all copper, they are copper gold. And then they last year did a deep drill hole on their property that was spectacular, and of course has ignited the fire in the market and said, hey, listen, you've got an amazing asset here at an early stage of development and all this deep drill result. We have so much drill potential as well, and we have an early stage asset similar to Filo del Sol. Obviously, I'm not expecting anyone to give us $1.5 billion valuation at this point in time, but I do want to draw attention to the fact that we are on a similar path or I would love to be on a similar path as they are.
Right. Okay. Right. Yeah. I think nice name to pull out of the bag. But back to where you're at the moment, because I kind of want to feel this excitement around the geology, right? So you're at altitude. You're going to have the usual things of forget the politics, forget whatever royalties the Chileans end up on. Those conversations we had multiple times. You're at altitude. Talk to me about doing business up there, water, power. Well, especially water, but power, etc. I know you're next to El Tiente.
Yeah.
But which is a good, that's a good parallel because of the proximity. But what are the difficulties of doing business where you are?
Yeah. So altitude is, people are always concerned, and they see that 3,700 meters is where our pit is. Most of the processing all of the processing would be done down in the valley that Escalones is around. So that's at around 2,000 meters. Excuse me. So the altitude is actually not that significant an issue for us. Certainly, being at elevation brings its challenges, but there's many mines in the world, many of them in Chile, many of them in operations, many of them proposed, such as Filo del Sol, for example, which is over 5,000 meters elevation. So 3,700 meters is actually not that high in comparison to many other projects in Chile. In terms of power, there's lots of power in the region. It's a grid connection that's in our PEA to tie into the nearest hydro dam, which is connected to the grid. All the power in the region comes from hydro or renewables. It's a great advantage for an SXEW project. Most of the power consumption comes from that electrowinning circuit. So then we can say our power is clean and green sourced as well, and that contributes to the greener production from an oxide heap leach project. Water consumption is very, very important in Chile, as anyone who follows the space knows. We have put plans in place to develop a pipeline into the valley over, as the current valley that Escalones sits in is a little bit sensitive to water consumption. So we at an early stage understood that and know that, without anyone coming to us from the government or permits or permitting agencies and saying, hey, you can't do that. We just did the right thing and put in a more expensive pipeline to get the water from there. We've already got potentially 2 sources of water from seawater pipelines that are contemplated being constructed to the El Teniente region, one by Codelco and El Teniente. We're in discussions with them to come to an understanding to access water from them, but also from another party that is contemplating building a pipeline for local users, including farmers. They just reached out to us in the last few days in order to sign an agreement as well that will allow us to bring water. So water, I actually think, will be solved very quickly on this asset, which is also something that many assets in Chile that our peers are still challenging to find water and lock it up. So actually very happy with the current state of the water question.
Okay, and with regards to operating at altitude, and you've explained what whether you think it'll be easier or not. Does that make it more difficult? Or not to get the permits and licenses that you want? Because I assume it's fairly barren land in terms of EIA approvals and so forth further down the line.
Yeah.
What's your expectation?
Chile has a very robust permitting process. They're a rule of law nation, though, very important there. You don't get what I would call a briefcase permit in other jurisdictions. You have to follow the framework, put in the work, environmental impact statements, do the archaeological studies, the biodiversity studies, community outreach, social awareness, building all of that up, culminating in getting your permits. At elevation, I don't think is necessarily a challenge. There's no glaciers in the nearby region, for example, and certainly not in the Escalones area that would be impacted by mining and development. So that's not an issue. But, for us, it's just going to be working through that. And, we're already building those relationships. As I mentioned, 2 weeks ago, we put out news where we signed a partnership with the University of Chile, which is the oldest university in Chile, I think in even potentially Latin America. One of the most prestigious, certainly. So they see the value in partnering with us for the long term. We're building those community connections, and coming up with technologies that will allow us to mine more effectively. I will say as well that you talk about the elevation. Many projects are at elevation, but it's a flat terrain. So the whole, say your pit is at 4,000 meters, but so is your processing and everything else. For Escalones being at 3,700 meters, but all of the processing and heap leach facilities being at about 2,000 meters, that means that it actually gives us advantages because to move the ore from the top of the ridge to the bottom, we are contemplating a conveyor system, for example, and we can even make that a conveyor system regenerative. So it actually generates electricity from the potential energy of the material that you're mining and moving down the gradient there. So yes, there is challenges at elevation, but also advantages that we can reap as well.
I was talking to a CEO who's got a project at similar kind of elevation, and I said,
which project? Sorry.
Well, I better not say on the basis of what I'm about to say.
Sorry. I thought you said a project name there. Sorry.
No, and he said in terms of recruitment, I said you must need some very fit people to operate up those levels. He said the complete opposite. Smokers tend to do a lot better at altitude than healthy people because they're just not used to that level of oxygen in the body. Anyway,
and for reference, high altitude mining starts at about 4,000 meters, so we're not even in the high altitude mining zone.
You ruined a perfectly good story of mine. Right. Okay. Let's get back to the geology bit because you've got to, and we're just still on project. I know it's the flagship project, but we're still on one project, and there's some other projects to talk about. And I don't want to use up all of your time on this, but you've got to move that PEA forward. You say yourself, it's plus or minus 35%. I suspect with in inflationary pressures and cost pressures globally, at some point, it's only going to go one way in terms of the study. So it's going to get more expensive. So you've got $6.5 million now. So you raised $6.5 million in October. I don't know how much you've got left in the kitty. But it suggests if you're to move this forward in a meaningful way as far as the market is concerned, and obviously deliver some of the exploration type drilling and or any other kind of drilling that you do, you're going to need to raise some capital soon. So when's that on the agenda?
Yeah. So first of all, we raised $6.5 million in our last raise. We're well financed to take us through this drill program, and that's a combination of cash on hand as well as warrants that are held by long-term shareholders who have committed to executing them and not selling them. We're in a very advantaged position for a junior mining company where all of our warrants, all of them, and options, except for a last batch that was just granted to management and insiders a couple weeks ago, all of those options and warrants are in the money at 60 cents or lower, and we're currently trading in the 80-cent range. Now, I'll remind listeners who may not be aware of this fact that 90 to 95% of warrants expire out of the money, worthless. So that should tell you, first of all, how strong we've moved in the last year. That all of our warrants, and it's not an insignificant amount. It's actually almost $20 million on top of the warrants that I just mentioned will be executed by the long-term holders. $20 million of options and warrants are in the money at the moment. So that is a tremendously cheap financing source for any junior company going forward. And since we're in the money,
it is.
Yep.
But they tend to do that nearer the date, right? Because they don't know what's going to happen in the market between now and then. This could come off again, so they're not going to. So in terms of timing, when what are we talking about for those incremental?
So a lot of those warrants are long term,
right?
But we already starting to see people executing the warrants as you expect in the market space. When they see volume, they see profitability. They execute the money warrants and take it to another company and do the same thing. So that is, again, normally you have warrants that last 5 years. These stories take 5 years to develop. It's no issue, but we're trying to do it in a short period of time. We maintain our strength as the warrants trickle in. Eventually, we expect about half of those warrants to be exercised on top of what we already have from money coming in. With our drill programs that we have planned, they're not massive 10,000 meter drill programs at this point, very moderate. As you know, we are doing drilling right now to understand the full extent of the mineralogy of the property. And then next year, we will be focusing in on the deep infill drilling of Escalones. That's more of a strategic decision.
Tell me about it. Tell me about it, because most people expect you to do a bunch of infill drilling, upgrade resource, and then get straight to a PFS, because it's a little bit more solid in terms of the economics and better understanding of what it is that you've got. Why not do that?
Yeah, so we have so much drill potential at Escalones that it behooves us to understand exactly the extent of the material that we have. So, for example, I was talking with our geologist the other day, and he said he worked on a project that they drilled everything for 5 years. They drilled it off, they did a PFS and an FS, and then just as they were about to get to construction, they drilled condemnation drilling, which is to determine and make sure, hey, there's nothing here. They condemnation drilled under their mill, and they found a higher grade deposit than what they just spent the last 5-10 years trying to develop. And back to the drawing board, because why would you go and build something like that when you now have a higher grade potential there? We need to make sure with two inexpensive drill programs, first on that Mancha Maria, and then on the Rio Negro property to the northeast that's had no drilling, that there's nothing better up there, which is always possible. We could find a much higher grade deposit at the Rio Negro that changes the focus of the project and says, you know what, maybe it's even better to go up there than to focus on Escalones.
Right.
But it also creates optionality for ourselves and major players as well. So we're not in a rush to build out Escalones. We need to acquire baseline permitting as well. So the timelines work out very well.
So that's kind of defining the what do we do while we're waiting for that. So there's a bit of because what we're going to ask you is, well, how much time, how much of a distraction is that? What length of rope are you giving yourself for that component? Because that's kind of ifs and buts and maybes scenario of right. Whereas again, this 75 to 80 million bucks level, you've kind of got to go through the gears a bit to keep that kind of growth going, keep the interest there, and deliver that. And there's a few ways you can play that through the drill bit. Obviously, if you whether it be expansion drilling or whether it be pure play exploration and the results kind of on your side, or you go through the study process on one of your assets, of which you have a handful, right? So. I just wonder how, it's always interesting how companies choose to play that, and luck will play a big part of it, and it'll get rebranded as strategy afterwards or
well,
something
I'm laying
clever.
The strategy out here early.
so I think it's just important to kind of lay that out there for us. So you're waiting around for some permits. So why not get on with a bit of drilling on the targets most likely? Okay.
Well, and I will say, we're not doing anything that is, abnormal in this regard. Again, you look at in our comp deck, you can look at a list of about 15 economically studied projects in Latin America and a few in Canada in the last decade. There's not a lot of companies that get to a stage where they put out an economic study, which is what we just did last week. I think in the last 2 years, there's been like two new projects, one being Merrimaca, and the last one I can't recall. What you see after that is you get that slow rise as you de-risk the asset, you do the work to develop it, and that includes finding more property, finding more stuff on the property, making your deposit larger, as well as pursuing permitting, and then starting to acquire strategic partners along the way. So we're not trying to rush into something that this small company can't handle at this time. It needs to develop. It needs to ferment a bit, so to speak, and become very attractive.
But you've already been unconventional in that sense, because you picked up a property and you say, well, let's raise some money and drill the heck out of it, right? But no, you said, we'll do that. But first, let's get a PEA out, because the history of this thing would probably lead people to believe that there's not a lot going on there. And we need people to understand that we've got the cornerstone. We've got a cornerstone of something here.
Yes.
So you have already been unconventional in that sense as an exploration company.
And actually, we haven't drilled anything on this property yet.
Right.
We've done just metallurgy and just project development work. And that comes from experience in those areas too, right?
Yeah, but okay. I guess we're saying the same thing, but I'm going to go, you needed to do what you did in that order before the end that you went off and did the drilling components, as opposed to be a pure play exploration. Let's drill, guys. Okay, that's kind of interesting. That's kind of interesting to me. Should we, given time frame, time constraints, shall we just quickly sort of tip our hat towards some of the other projects? And maybe, like say, if you'd be kind enough come back on, I'm kind of fascinated by copper stories, because there just aren't any good ones out there, and we need to see whether this is a good one. Obviously, you talk about Cristal up a little bit further north, up in Chile. You doing anything with that?
Yeah. So this is, we talked so much about Escalones, but really there's so much more to the company as well. It's kind of crazy that we're at such a value that we are right now with what we have. And again, I get this message from when I tell people who've never heard about it for the first time, they see it as well. Cool. So let's talk about Cristal. Cristal is near the Peruvian border. It's a land package that has never been drilled off, surrounded by major players like BHP that have been looking for a deep sulfide deposit below what's called post-volcanic or ignimbrite cover. So I won't get too technical, but there's a geophysical anomaly about 600 meters below the surface that we will be targeting this year with an inexpensive drill program. And the idea here is that because this is where two fault lines intersect, there's a high potential, as well as the geophysical support and everyone else sniffing around in the region who've had moderate success, that there's a potential for a high-grade drill result here that has not been seen before. And so for an inexpensive program, we're going to test out that thesis. And, I call this our wild card, because we all know how a single success of a drill result, a deep result like that, if you hit a 2 or 3%, and I couch that with a very big if, it changes the nature of that project as well. But for that, we wouldn't be looking to develop it. The package is too small, but I think that other players would be looking to consolidate in the region.
So that's the game plan on that one. Let's go even further north, up into Arizona.
Yeah.
Okay.
Yes.
So Zonia.
Zonia is another SXEW project that was a brownfield operation. So this is a project that has actually produced 60 to 70 million pounds of copper in the 1960s and 70s. The property shut down due to low prices at the time. Over the ensuing decades, other operators have tried to restart the project. They've done drilling on it, and it came into our hands through a merger with a company called Cardero Resources. Cardero Resources is another company that Hank was involved in. He was the CEO. He brought that asset into Cardero, and now we've brought it into World Copper. Now, why did we think it's so valuable? It is a 200, so it has a PEA as well from 4 years ago. They had a very strong result from it, but they never developed it. They took their foot off the gas and lost momentum, the momentum that we were just talking about for the last half hour or so.
Well, the question I wouldn't have asked, why do you think it's valuable? I was like, why didn't Cardero think it was valuable? Was that just a question of timing and price in the market, or was there more to it?
It was the shareholders and board disagreed on how to progress the project, and they didn't think that that was the right time to develop it. And it was a challenge at the time. And unfortunately, I'd rather be here 4 years later with a feasibility study or a construction decision ready to be made and some permits in hand, because the property sits on private land. The majority of the property sits on private land in Arizona, and that means you can permit it in a 3 to 4 year time frame. And this asset has attractive economics at $3. So it's 200 million initial capital, 200 million after tax NPV, about a 30% internal rate of return. But because it's at SXEW at $4 copper, it's looking at a $450 million after tax NPV. Again, at the PEA stage, of course, there's 50,000 meters of drilling at this property. It's well understood. We can fast track this project into a development story, as we only picked it up 3 weeks ago. We're doing strategic assessments right now of it. But there's also, so as I mentioned, when you sit on private land, you can permit faster. They constrain the resource to what would sit on the PEA or fit in the PEA on private land. It's actually 50%, potentially 50% more resource available drilled already that wasn't included in that PEA. So I can add 50% to this resource, make it larger, take it from about 100 million tons to potentially 150 million tons without spending a single dollar on exploration. But we also have exploration potential to the northeast. Nothing has been drilled up there but geophysical anomalies and characteristics that match the main resource, as well as significant, just walking along, you see copper mineralogy. So we see the opportunity to make this project more valuable in that regard as well. Again, doing a strategic assessment of it. When we announced this transaction, it was under $10 million, all shares, no cash, just too much value to leave on the table. We see synergies there with getting this project in line, producing cash. Now it answers the question of how you fund a how you fund an Escalones type project, because a 200 million with a strong performance from a Escalones PEA, I can potentially sell a royalty, for example, on Escalones that would fund a Zonia and then put it back into Escalones as a concept. But so many assets with this company. We're not just sitting on one, we're developing many, and it's all well funded to advance our agendas at all three of these assets this year.
Okay, I think we're going to leave it there, because I'm feeling sorry for the listeners here. It's like we got into way too much detail. Perhaps they give us Zonia and Cristal some a fair amount of time. But will you come back on?
Anytime, of course. I love telling this story.
Okay, yeah, no, we can tell. I'm just intrigued in terms of how you kind of balance the books with a portfolio like this, whilst kind of driving that accretive investment and growth component to what you're trying to do. So be really pleased to have you back on. So appreciate your time today, Nolan. Stay in touch. We'll see you soon, right?
Yep. Thanks, Matt, for having me on. And thank you all to the listeners and viewers. It's been great chatting with you and getting to know you, and letting you get to know the company. Some takeaways that I would like to get across to the audience is that we are a very young company by the terms of the mining industry. I can't emphasize that enough. This is a story that is moving very quickly. We are developing things very quickly. We have the right team in place. We're well funded and well financed to advance our agendas. We know what it takes to unlock the value in the assets that we have. And we put out a steady flow of news. So if you're excited by waking up in the morning and seeing what your investments are doing for you, you never have to worry with us. We are pushing forward on multiple fronts. And another thing that I take pride in is that we deliver on what we say we are going to do. If you've been listening to me in other areas for the last year, I've been telling people, we are working to update this resource. We're going to put out a spectacular resource as an oxide resource. That's what we did. We're going to merge with Cardero Resources. That's what we did. The PEA numbers are looking great. It's coming along nicely. That's what we did. As we advance, you can be assured that I'm not going to overpromise and underdeliver. That's not in my nature. I'm a professional engineer by background. As I said, I speak the truth certainly, and I hope that gets across to you as well when you're looking at us as a potential investment opportunity. Thank you very much.